IRS sending more math error letters to taxpayers. Don't panic. Here's why. New rules mean IRS letters about tax return mistakes should now be clearer, more specific, and easier for taxpayers to challenge. More taxpayers could soon receive IRS math error letters, but the notice does not automatically mean they are facing an audit or a major tax problem. The letters are used when the IRS believes it has found a mathematical or clerical mistake on a tax return. That can include calculation errors, missing information, incorrect credits, or numbers that do not match what the agency has on file. What is changing is how clearly the IRS must explain the issue. According to Yahoo Finance, a new law now requires the IRS to send notices that tell taxpayers more specifically where the mistake was made and what adjustment the agency has applied. That matters because many taxpayers have previously received confusing notices that left them unsure what had changed or how quickly they needed to respond. Why IRS math error letters are changing. The change comes through the Internal Revenue Service Math and Taxpayer Help Act, which was designed to make IRS communication clearer. The National Taxpayer Advocate has said the IRS typically sends several million math error notices each year. Before the change, these letters could be vague, and some taxpayers did not understand that they had a limited window to challenge the IRS adjustment. Under the new rules, the IRS must explain the alleged mistake in plain language and tell taxpayers about their right to request an abatement. That deadline is important. Taxpayers generally have 60 days from the notice date to dispute the adjustment. If they miss that window, the IRS change may become final, making it much harder to challenge later. Why IRS math error letters are changing. A math error notice should not be ignored, but it also should not cause panic. The first step is to read the letter carefully and compare it with the tax return that was filed. Taxpayers should check the specific line or calculation the IRS says is wrong, then review supporting documents such as W-2s, 1099s, credit forms, or deduction records. If the IRS is correct, the taxpayer may simply need to accept the adjustment or pay any balance due. If the taxpayer disagrees, they should respond within the 60-day deadline and keep proof of anything sent to the agency. The key takeaway is that the IRS is not just sending more letters to scare taxpayers. The law is meant to make those letters easier to understand, giving people a clearer chance to fix mistakes or challenge the IRS when it gets something wrong.